Previously, we deposit $1,000 into 5 different portfolios. Every week after that, we deposit $100 into each portfolio. Today, we're gonna see which portfolio performed the best in the last week. Hi, my name is Kyle, your average investor, and welcome to my investing experience, week 2. So I did buy all this stock Friday the 13th of December, and last Friday, I had another $100 into each portfolio. So I messed up. I forgot to record my M1 portfolio on a Sunday, which is the day I'm actually filming. So now I have to record it on a Monday, so the portfolio value can be completely different from what I'm saying. Anyway, sorry about that. But if you guys haven't clicked the subscribe button yet, click on the subscribe button, turn on your notification bell. Anyway, you guys have a great Christmas, all right? Starting out with our first portfolio, which is the Golden Butterfly portfolio. On that portfolio, it showed that we up by $7.42. M1 Finance showed that the 1 week gain, which is 0.43%. The top performer in this portfolio for this week is the Vanguard Total Stock Market Index, VTI. The worst performer, which is BLV, Vanguard Long Term Bond. I expect nothing less from this portfolio because, like I said in the last video, this Golden Butterfly portfolio is supposed to give you the market return with the low volatility drawdown. And honestly, I cannot wait for the market correction just to see how this portfolio performs because it's supposed to have very low volatility drawdown. Moving on to the next portfolio, which is 2050 aggressive portfolio made by M1 Finance, especially for retirement. Overall for this portfolio, we're up by $22. But for 1 week gain, we only up by $7.13. And M1 Finance showed that we up by 68%. I mean 0.68%. And again, the only thing that negative from this portfolio is the Vanguard long-term bond and Vanguard medium-term bond. So it seemed like the only thing doesn't do well this week is the bond market. With 0.68% gain, this portfolio did outperform the market just a little bit. Moving on to my next portfolio, which is a value dividend investing, up by $7.39 overall. But this week, it actually down by 91 cents. Now, according to M1 Finance, that is 0.08%. The best performer in this portfolio, which is MSC, up by 4.73%. Now, the reason MSC is up because it announced that it's gonna have special dividend. It gives you $5 for every share that you hold. MSC normally doesn't have special dividend. This is pretty rare for them. But it doesn't matter, it's gonna benefit investor like me because not only I'm gonna get that special dividend, but now the price appreciate because other investors wanna jump in just to get that special dividend. Now the worst performer of this portfolio is Franklin Resort and Unum Group. Unum Group decreased by almost 5%. Franklin Resort decreased by 2%. Now it doesn't seem like any bad news caused this problem, just negative selling pressure continue. Now I'm pretty excited about this because it means I'm buying them for at a deeper discount. Overall, this portfolio seems to perform the worst as of right now. Hopefully, it's not because my stock picking skill. Okay, moving on to the next portfolio, which is a REIT portfolio. Now, this is very surprising to me because this week it performed the best, up by $30.72 gain. That 2.9% gain according to M1 Finance. With the lowest percent gain from NNN, give you 1.55%. And high percent gain in NHI give me 4.05%. So yes, this portfolio give me close to 3% gain this week. That's completely smashing the market. It outperformed the market close to 670% gain. And I'm pretty sure the main reason is I myself individually handpicked this stock. Yes. Now I never invest in REITs before. All the kidding aside, it's just luck, you know? Or is it? Now, our last portfolio is a swing trade portfolio. I still have $1,000 and I deposited another $100 in there, so it's got $1,100 in cash. I did not see any opportunity in the market yet. But here is a few stocks that I'm keeping my eye on if it keep decreasing. Now, the first one is Dollar Tree. Dollar Tree tanked after missing earnings because of tariff. Now, I don't want to go into why I'm thinking Dollar Tree could be a long-term play, but one of the reasons why is because online retail like Amazon were not able to take Dollar Tree out. Just because every single thing in there is selling for $1, so the profit margin for it is super low. And for online retail like Amazon to sell something for $1 with free shipping, it just doesn't make sense to me. And the second one I want to keep an eye on is Twitter. Twitter, I already have a big position on my main account with average price of 30. So I do not want to buy more share while going back up. But if Twitter dropped down to around the $30 price range, I will definitely buy it again. So yes, for now, this account still got $1,100 in cash. So for the first week, the best performance, it reads with a 2.95% gain. And the second best performer is the M1 retirement plan account. Coming on after that is the Golden Butterfly portfolio, and after that is the Dividend value stock investing. And the worst performance is my swing trading, which is still in cash. 0% gain, 100% in cash. And thank you for watching until the end. Please click the subscribe button and turn on your notification bell. I see you guys next week.